Cobra 3 is one of the top strategies that we have. We're looking at the no profit target version and how well it has done. This is a strategy that tests very well back to 1997, which is the beginning of E-mini S&P data. And we traded this in the portfolios on Monday, the profit target and non-profit target version. And we talked about this in February when we had these big moves. It's very hard to stick with trades into the close and ride these winners into the close. And we'll take a look at the Cobra 3 strategy did well, and then we trade the variation where there's no profit target. And so to get in a trade like this, if you've been trading in recent years, the market always feels like it's going to bounce. It always feels like it's going to bounce, and so if you're just sitting here watching it, it's difficult, and you have to sit through. In order to capture this trade right here, you have to sit through this bounce. This bounce was low 26.40.50 to high of 26.96. You're talking 56-point bounce there, and even higher on these bars, 27.01, 60-point bounce. So it sat to this 60-point bounce because it had a good entry. This uses a $600 stop loss and no profit target. It gets out at the end of the day, and you just have to let it run, and you just have to sit back and almost turn your head because it's hard to watch this sometimes. You see another trade here. On the chart, it looks nice. It's easy to see on the chart because you see this. But if you're trading it, you see this, and then you see this, and you say, oh, I'm back to break even. Maybe I should get out if you're a discretionary trader. But you have to give yourself a chance to capture the big profits. It has losers as well. Had a short here near the low, got stopped out. Had a long here that didn't really go anywhere. Some long trades, a long near the high, got stopped out, got stopped out, got stopped out. 3 losses in a row, and then it went through another series of winning streaks. 27.32. We recommended that you could remove the profit target as early as February the 10th. And so you can see some of these trades going forward from that point forward. Nice short there. This trade was for 987.50, almost 1,000. This trade was for let's see, what does it say down here? It was for 975. Then you had a loser, and then you had a winner here, and another winner here, a winner there, loser, winner, winner. So it's been nice, and this didn't do much in 2017. You see the sideways price action from April of 2017 forward. We can go back. We have further back tests on this. It tests well back to 1997. And you see the results over the past 12 months. This is what it has done. 295 average trade profit on 42 trades. Doesn't trade a lot. Largest winning trade back in February, stop loss of 600. We're using $25 round turn slippage and commission. In this scenario, it shouldn't matter what your slippage and commission number is. If it's 25 or 50, it's on this many trades using this average trade profit. It's still gonna have good performance over the past year. And again, it tests well back to 1997 also. And here's the equity curve. And so periodically, you can see what it's done over the past year. It didn't do much in 2017. Let's look at the annual real quick. This is only part of 2017. But since April of, say, 2017 through the end of the year, 20 trades, 112.50, kind of makes you want to give up. Low VIX, not bad because, I mean, you're talking a very low VIX environment. And a lot of the strategies that we had in 2017, we had to adjust to the low volatility, and then they didn't do well in 2018. So this is a strategy that kind of broke even in 2017 on a low VIX, which is good because we're here to catch the trend, and we don't have a trend and you still break even. That's really good. And then in 2018, it's done this with the benefit of hindsight because we didn't make this modification until mid-February where we changed this profit target. Here's the monthlies. And I'm going to take a look at the long-term variation that we had with a profit target. The no profit target version is a $600 stop loss, and we exit on the close with no profit target. Here is the $300 stop loss with the, and this is only going back 7 months. I can go back to April. Let me go back to April. Let's go back 12 months so we can compare. So going back 12 months, this is what we have. Here's the performance summary. Here are the periodical returns on a monthly basis. This actually lost in February. The stop loss was too tight, $300. But you see in 2017, what was the annual in 2017? This is 187.50 from April going forward on 20 trades. And so it didn't do bad. To break even on a strategy that looks for the trend and you have a low VIX environment, it's not bad. It keeps you in the game for high volatility. So in 2018, $1,900, not anywhere close to the non-profit target version, but for one contract on the E-mini S&P, it's decent. It doesn't take a huge amount of capital to trade one E-mini S&P. If you traded one E-mini S&P with 10,000, you get 1,900. That's not bad. And so the non-profit target version is definitely better, but you could trade both. You can trade both of these, and you have one with a profit target and one without a profit target. Most people I know have a hard time even trading for a $600 profit target. If you're a discretionary day trader, that's hard to sit through. For most people, it takes some extreme discipline and experience to be able to sit through the trades where you have to capture larger winners. And so the system can do that for you. And from a discretionary basis, this is where a system beats a human trader, because the hardest thing to learn how to do, the last thing that you have to do to become a good discretionary trader, is to ride your profits, capture big winners, and most people can't do that. Most people never get to that point. You can get to the point of cutting your losses, but riding your profits is the hardest thing, and the thing that most discretionary traders just can't do. After a losing streak, you tend to grab those profits, and graduating to that level is difficult. So these systems do that, and that is what I'm taking a look at today and wanted to share with you. And this is Thursday. Markets are closed tomorrow for Good Friday, and Cobra 3 is a strategy that's in the portfolio. That's one to look at if you want to trade just one system, or if you want to trade the portfolios, Cobra 3. This is how you can trade it.